Hello, and welcome to Virtual Investor Conferences. On behalf of OTC Markets, we're very pleased to join us for our three-day Metals and Mining Conference. Our next presentation is from Newcore Gold. Please note you can submit questions for the presenter in the box to the left of the slides. You can also view a company's availability for one-on-one meetings by clicking Book a Meeting in the top toolbar. At this point, I'm very pleased to welcome Mal Arwaska. She is the Vice President, Corporate Development and Investor Relations of Newcore Gold, which trades on the OTCQX Best Market under the symbol NCAUF and on the TSXV under the symbol NCAU. Welcome, Mal.
Thank you very much, John, for the introduction and for having us on for the conference. I'm just sharing my screen, so that should show up momentarily. And for those of you who don't know me, my name is Mal Arwaska, and I'm the Vice President of Corporate Development and Investor Relations for Newcore Gold. Please note that I will be making some forward-looking statements today. Please do refer to the full disclosure that is available on our website and within our presentation on that website. So in terms of Newcore Gold, we are advancing our NCAU Gold project in Ghana. Three key things to remember about us and topics that we will dive into in more detail as we go through the presentation is, first and foremost, this is a team with a track record and one that is strongly aligned with its shareholders. 15% of the equity is held by management and board. Our NCAU Gold project in Ghana is underpinned by economics. We released the results of a PEA study in mid-2024, so mid-last year, that highlighted the development potential for an open pit heap leach project. And further to that, NCAU benefits strongly from exploration upside, given its location on a prolific gold belt that hosts a number of multi-million ounce gold mines. So in terms of that team, our leadership team is led by Luke Alexander, President and CEO. He comes from a finance background with over 20 mining sector, notably institutional sales desks in London, where he built very strong institutional relationships. Our VP Exploration, Greg Smith, he is a geologist with over 35 years of experience, specifically drilling out these large-scale deposits on greenstone-hosted belts, and he's been involved in advancing the NCAU Gold project for the last 15 plus years. Myself, I come from a finance background, investment banking, private equity, and now more recently on the corporate side. Brandon Fraser, our VP Projects, he's a mining engineer who has significant experience with studies as well as construction of mines. And then Dan Wilson, our country manager, he's Ghanaian, he's based in Ghana, he is a geologist, and he has spent over 25 years on and off advancing our NCAU Gold project, so he knows it extremely well. We are backed by a board with very significant experience, and notably Doug Forster and Blaine Johnson, who are founders of Newcore Gold. They were behind recent successes such as Newmarket Gold that sold to Kirkland Lake, and most recently Calibre Mining, which is now in the process of merging with Equinox Gold. As a result of our team and our team's experience and long relationships, I think that's very much reflected in our share ownership. So 15% of our shares, again, are held by management and board. That has been invested alongside shareholders, either through financings or buying on market. That's complemented with a very strong institutional shareholder base. So about 55% of our shares are held by institutions. We actually just increased that significantly from 45% to 55% with our most recent financing that we completed at the end of February. Some of those notable institutions include Franklin Templeton. They own about 9.5% of the company. Aegis Financial and Ruffer own about 5%, and then a number of additional institutional investors in that 1% to 3% range, all value-focused, long-term focused funds that have supported the company the past 5 years. In tandem with that, we have really strong analyst coverage, with both coverage from Canaccord, Peter Bell, and SCP Resource Finance, Justin Chan. In terms of our basic shares outstanding, currently 251 million Current market cap is roughly Canadian 150 million. That in US terms would be about 110 million US. We are well funded for the work underway at NCAU. So post close of that financing that closed at the end of February, we had cash on hand of Canadian 17 million. In addition to that, we anticipate further proceeds of approximately 14 million Canadian over the course of the next 9 months from warrants that are well in the money. So we are very well funded for a 35,000 meter drill program that's underway, as well as advancing our NCAU Gold project from a PEA stage to a PFS stage next year. In terms of our project location, NCAU is located in Ghana. Ghana is a fantastic mining jurisdiction. It is Africa's largest gold producer and also the 6th largest globally. It has a stable democratic government that supports mining. They're very much pro-development. Mining is essential for Ghana's economy and tax base. They have modern infrastructure, a number of large-scale gold mines, a history of gold mining with over 200 million ounces of gold discovered across the country. Importantly, it's English-speaking and very safe. You do not require security in Ghana. But notably, what we think speaks to the quality of the jurisdiction is really who's operating in country. So when you look at majors, 4 major senior gold producers operate mines in Ghana: Newmont, AngloGold, Zijin is the latest addition to that list in Ghana, as they just acquired Newmont's Achim mine from them. Newmont continues to have a very strong presence in country. So they're actually investing about $1 billion US to advance their Ahafo North project into production later this year. That'll expand their Ahafo complex production to almost 1 million ounces a year. That is one of their main contributors in terms of their gold production. So that speaks to the quality of the jurisdiction. At NCAU, we did release the results of a PEA study in mid-2024 that highlighted the development potential for an open pit heap leach project. That study was led by Lycopodium. Lycopodium has a very strong track record in terms of projects in West Africa. With that study, it highlighted very robust economics. So at a gold price of $1,850, which was the base case price at the time that we completed that PEA study, the economics highlighted 371 million NPV after tax, 58% IRR, and a 1.6-year payback. I'll talk about the leverage to the gold price of those economics in a few slides, given how much gold has moved in the last year since we actually published this study. But all of this is really driven off a low upfront capex, so 106 million US initial capital. 3 key things there. First and foremost, NCAU is very amenable to heap leaching. With all the metallurgical test work we've completed, that has highlighted its amenability to heap leach processing. As part of that, you don't require a mill. So heap leach has a lower upfront capex. Secondly, contract mining, very standard in West Africa. That the PEA does contemplate contract mining, so we don't need to buy a mining fleet. And then thirdly, with the type of mineralization we have, you don't need to crush that mineralization until you're in the harder rock in years 5 onwards. And so you're actually funding that crusher from your cash flow that's generated from the project. The production profile that was defined in the PEA highlighted 122,000 ounces per year of gold, with peak production of 155,000 ounces over a 9-year mine life. Importantly, we think there is a lot of room to expand on this, to expand on the life of mine gold production of 1.1 million ounces, expand on the mine life, as well as the production profile, given the exploration upside that I'll touch on a bit later in the presentation. And importantly, that exploration can be funded from cash flow. So this slide here highlights the after-tax cash flow profile that was defined in the PEA. It highlights it at 3 different prices: $1,850, which was the base case at the time that we released the PEA, $2,350, which was actually the peak gold price in April 2024 when we released the PEA. And then given the move in gold more recently, we are also highlighting those that cash flow profile at $3,000. But if we just look at $2,350 as a base case in this scenario, what you can see here is life of mine, the PEA highlighted after-tax cash flow of $855 million US. That not only funds your crusher installation capital, which is $58 million split between years 4 and 5, heap leach pad expansion in years 3 and 6, but leaves plenty of cash flow to redeploy into that exploration potential that exists along the project. So we believe by putting this into production and getting that cash flow going, that will provide a real unlocking value potential longer term of the exploration that exists. Again, the PEA economics highlighted the strong leverage that NCAU has to the gold price. So this is a sensitivity analysis of those economics, the value generated within the PEA. And what you can see here is that at $2,350 gold price, the project generates $632 million. At more recent gold prices nearing $3,300, you see that that increases. So what we're seeing here is for every $100 move in the gold price, we're seeing about 50 million US added to the NPV of the project. All of this from a valuation standpoint compares to our current market cap of US 110 million. We believe that with further work de-risking, advancing the project from PEA to PFS towards a construction decision, we should see that valuation disparity contract. We should see our market valuation better reflect the value that has been defined within the economics of the project. So further to that PEA, we are advancing that PEA with the work that we're doing now, which includes hydrogeology, geotech, more metalling, which is the key component of advancing our project from PEA to PFS. We are in PFS later this year with those results in the first half of 2026. But importantly, NCAU also benefits from district scale exploration. So we're going to touch on that now before I highlight the work that is underway at NCAU currently. So NCAU sits on a prolific gold belt in Ghana. We do have a current resource defined on the project of 743,500 ounces in the indicated category, along with 972,000 ounces in the inferred category. But this is a district scale opportunity, 248 kilometers square property with 25 targets identified across the project. Of those, we've drilled on 9, and of the 9, we currently have only defined resources on 5. So lots more potential in terms of that district scale potential across the property. And given where the project sits, we believe that there is potential for more, given the mines up to the north of us do host much larger scale deposits. We're also starting to define the potential at depth, which I'll talk about in a few slides. So in terms of location, NCAU does sit on a prolific gold belt in Ghana. We are located in the southwest corner. There's 2 prolific belts within that area of Ghana, the Ashanti Belt and importantly the Sefwi-Bibiani Belt, where our NCAU Gold project is located. On that belt, we have Newmont's Ahafo mine, which I touched on earlier. They're investing about $1 billion into that mine now to expand the production there. That currently has an endowment of over 20 million ounces. We then have Asante, which is operating the Bibiani and Chirano mine as a mining complex now, exploring in between those 2 mines. That has an endowment of over 10 million ounces. With the drilling and work we've done to date at NCAU, as a result, we think we've only just started to scratch the surface of the potential of the project longer term. So with that, I'll highlight the property itself. So again, NCAU spans 248 kilometers squared. It is 40 kilometers from end to end. There is actually a paved road and power line that run through the project to the town of NCAU, which is a real benefit for us. It has a population of roughly 15,000 people. It has housing, restaurants, hospitals, schools. It's a real benefit for us in terms of being able to house our employees near the project. And then in terms of that district scale opportunity at NCAU, so we have currently defined 5 deposits that host our existing largest, 80% of the current resources that have been defined, followed by Nyam, Kwachikrum, and Tokasea. So those 5 deposits currently make up the resource that's been identified at NCAU. Importantly, all of those deposits remain open along strike for expansion through drilling. They also remain open at depth. Further to the defined deposits, we also have areas where we have drilled, but we have yet to define a resource. That includes Irati, Kogina Hill, Sium South, which all will merit additional drilling to move those targets towards a resource. And then further to that, we also have a number of priority targets and over 20 targets identified on the project that are stage that have yet to be drilled. The property to define additional ounces that would be amenable to heap leaching, near surface, shallow. But then importantly, the next leg of that exploration stool, the longer term potential at NCAU also benefits from potential grade shoots that we know exist along this belt. So this is a slide comparing Chirano. As a reminder, Chirano is a gold mine that sits about 50 kilometers to the north of our NCAU Gold Project. It has been in operation for the last 20 years as both an open pit and underground operation, and they have defined an endowment of over 5 million ounces of gold to date. That mine started as a series of shallow open pits. Over time, with drilling and with exploration, they defined higher grade chutes at depth. They're currently mining down to about 800 meters vertical, 1.5 to 2 grams per ton. When we now compare that to NCAU, that 800 meters is really important to keep in mind because we've only drilled down to, on average, a depth of about 100 meters vertical, a very small portion of the drilling that has been completed to date. And importantly, however, with that deeper drilling that we have completed, we have started to define those higher grade chutes on our property. So I'm now going to take you over to the NIAM deposit. This is the deposit where we have done the most deeper drilling. And by deeper, I do want to caveat that that is 200 to 300 meters vertical, so still very shallow. This is a long section of the NIAM deposit. This highlights the pit shells that encompass our current resource estimate. And it includes the resource model. So what you'll see here is the higher grade resources in yellow, 0.5 to 1 gram per ton, and in red, 1 gram per ton. All the drilling we've completed to date, along with some highlight holes. And what we're clearly starting to define here, as we take off the lower grade and focus and hone in on just the one which is in red, we start to see here are these higher grade chutes developing. See clearly on this long section. And some of those results to date that we have encountered at NIAM include 7.4 grams per ton over 7.7 meters, 3.17 grams per ton over 9 meters, 4.9 over 8 meters, 2 grams per ton over 17 meters. Most recently, and this hole was completed post completion of the resource estimate, we intersected 6.6 grams per ton over 4 meters. This is clearly below that chute that's already starting to be defined. So we believe that with additional drilling, which will be warranted, we will continue to highlight that deeper, higher grade potential that exists in the sulfides on our property. So now shifting to the work that is underway at our NCAU Gold project in Ghana. We have a very busy year ahead of us and have been extremely busy the last 6 months. So we do have a 35,000 meter drill program underway. This was expanded from 10,000 meters on the back of completing a financing at the end of May. And so the first priority with that drill program is resource growth and infill drilling. So really, that is focused on infill for resource conversion to take our inferred mineral resource towards an indicated category, as we require that for a pre-feasibility study. So that is a key component of the work that needs to be completed in advance of commissioning that pre-feasibility study. We will also be looking to deploy that drilling within that 35,000 meters. We're looking to deploy some of that drilling, obviously, to earlier stage targets as well. And we will be looking to complete some drilling on the higher grade, deeper potential on the project as well. So with the drilling that we have released to date, including the drill results that we just released this morning, we had a total of 17,592 meters released to date. Most of that has been focused on our two largest deposits on the project, Boyne and CU. So with that drilling, the key takeaways have been to date, first and foremost, we are encountering wide zones of gold mineralization within both the oxide and the sulfide horizons, and those are encountering also higher grade intervals at depth. We're also proving out that continuity mineralization, that resource conversion, and we're also seeing that potential for future resource growth, and I'll show you in a couple slides really where we're seeing this mineralization being encountered outside of the limits of the pits that currently constrain our mineral resource estimate. So the results to date have been very strong and very successful in achieving our goals. So these drill results at Boyne, which is our second largest deposit at NCAU, were released this morning. We encountered wide zones of gold mineralization with higher grade subintervals. So KBRC 352 is the highlight hole from today's news release. It encountered 2.25 grams per ton gold over 56 meters with a higher grade subinterval of 3.83 grams per ton over 15 meters. Importantly, that hole ended in mineralization. So what you see here is a cross section that highlights the resource pit that encompasses the current resource that was used for the PEA, which then highlights that we are encountering mineralization outside of the limits of that pit. So we do believe that with the drilling that is underway and that has been completed, that we should see not only resource conversion, but also resource growth, as we'll be able to extend the limits of those pits. One of the other results from this morning was KBRC 344, which encountered 1.16 grams per ton gold over 72 meters, including 3 grams per ton over 10 meters, again, outside the limits of the pits, with that hole ending in mineralization, highlighting that growth potential at Boyne. Late last year, as part of this drill program, we also encountered our highest grade interval to date at KBRC 301, 204 grams per ton over 1 meter. And within that set of results, we also encountered a high grade over wider intervals in KBRC 307A with 3.3 grams per ton gold over 28 meters with a high grade interval of 37 grams per ton over 2 meters. So we're seeing very strong success at Boyne with that resource conversion, but also resource growth potential. And then as well, we're seeing that in at other areas across the project as well. So these results that I'm showing now are from CUM. These were released for resource growth as well as conversion. So at CUM, SWRC 194 encountered very wide zones of mineralization, 1.85 grams per ton over 62 meters with a higher grade subinterval of 8.4 grams per ton over 10. And then at CUM extension parallel, which is one of our targets at CUM where we believe we'll see resource growth, we did encounter mineralization outside of the limits of the current pit. So once again, we believe that this is a very strong indication of resource growth going forward. So with that, we're really excited to continue to advance NCAU and unlock its value. So we, as a reminder, a 35,000 meter drill program underway, so we will have lots of news flow through the rest of this year, and that is targeting infill for resource conversion as well as resource growth, and we'll also be targeting some earlier stage exploration as well as that deeper drilling. We are fully funded for the next couple of years with 17 million of cash and an additional potential for 14 million from the exercise of warrants. So that funds us for that drill program, as well as a pre-feasibility study that we plan on commissioning later this year with the results in the first half of 2026. And this is a team with a track record and one that has very strong alignment with its shareholders. Again, 15% of the equity is held by management and board, and we have strong capital market support with institutional investor support at about 55% ownership and research from TU. It is a project with an established resource in a multi-million ounce gold district. It's underpinned by economics with a robust PEA that we put out last year, that we're pushing next year, and also benefits from that district scale exploration opportunity that we will continue to focus on unlocking through the drill bit. So with that, I'll conclude the presentation and answer some questions, but please don't hesitate to reach out directly, and also please do follow us on social media. We do our best to share a lot of content from site to, as well as obviously our developments and interviews. So with that, in terms of the questions that we have. So any other milestones over the next 12 months other than the 35,000 meter drill program? So thank you for your question. So with that, yes, absolutely. So obviously we will have lots of news flow from the drill program that is underway. As you can see, if you look back on our news flow over the last 6 months, we tend to try to have news out every month as we get results back from the drill program underway. But we are also doing a lot of technical de-risking work as we take our project from a PE. There is completing the drilling that's required, but we also are completing geotechnical work, metallurgical test work, as well as hydrogeology, social and baseline studies, and we will release some of that information as that is completed as well. And obviously, you know, one of the other key milestones will be commissioning that PFS later this year and the results from that pre-feasibility study that we anticipate having in the first half of 2026. So it's a very busy year for us. In terms of M&A activity for companies of similar size and activity in Ghana, I think, you know, generally we are seeing M&A activity in West Africa, and historically there always has been M&A activity in West Africa. But if you look at the last 12 months, it's predominantly in later stage projects that are either construction ready, such as Osino, which they were about to fund their construction, or other companies that are at a feasibility stage, so almost sort of construction shovel-ready, de-risked. And so we see real merit and benefit for us in taking this project from a PA to PFS, not only because this is absolutely a project that we could finance and build given the low capex up front, but also, of course, as you continue to de-risk, that does potentially attract. We believe that we should see value re-rate closer to what those economics show and highlight as part of the PEA. But then obviously as we advance towards the PFS, we would anticipate seeing a re-rate as we continue to de-risk the development of the project. So with that, that concludes the presentation today. Thank you for your questions. Thank you for taking the time to get an update. If you do have any follow-up, please don't hesitate to reach out to me directly. And please, again, do follow us on social media, on X, on Facebook, on LinkedIn, and then we do also have a YouTube channel where we share some snapshots from site. So thank you very much. Have a nice day.